everyone, so in this video I wanted to talk about long-term care insurance, the most fun insurance we have. It's actually probably the most needed insurance we all don't have, but for long-term care insurance, it can be very scary because no one wants to think about living in a nursing home. But long-term care insurance has evolved a lot since, the 80s or the 90s when it was sold as really a nursing home benefit. Long-term care nowadays is more about needing help around the house, needing help to take care of, yourself, because maybe through either, age or an illness or an injury, you no longer have the mobility, the function, or the physical strength to do many things that you could do before, or maybe even just the coordination to do things that you could do before. Right? You got a stroke, or maybe you broke an arm, or you broke a hip and now you're confined, or you have difficulty doing things alone, bathing, eating, cooking, cleaning, etc. And if you have a cognitive disorder. So those are the things that those are the things that a long-term care plan will cover. Now, on the flip side, you can say, well, I got Medicare. Medicare covers home health, and Medicare covers skilled nursing homes. For Medicare, they cover services that are medically necessary. So if you need your house cleaned, that is not a medically necessary service as needed by Medicare, even though we can all argue that, well, if you have a cleaner house, yeah, you'll probably be healthier. That doesn't fly, and unfortunately won't fly with most insurance companies. They won't hire somebody to go clean your house because you can't. Medicare kind of starts where, okay, you need to get fluids pumped every 2 weeks or something, or 2 times a week. You need to have someone come to the home and provide you with at-home dialysis because you cannot physically make it to a dialysis center, or I'm not even sure that's a service, but things of that nature. Maybe an injection you need in your home because you can't get to the office, or physical therapy at home because the insurance company won't pay for your skilled nursing home. But things of that nature. It's not going to pay for house cleaning services. Most times it's not. And it's not really going to pay for someone to look after you 24/7. That is the major cutoff point. And unfortunately, many people don't really start looking for long-term care insurance until the need arises. And I'll tell you that it's far too late. Most people, financially speaking, when you look at a long-term care policy, one that's going to be meaningful, and you're in your 60s, the policy will probably run you about $250,000 throughout the rest of your life. So if you have, let's say, actuarially 25 years left, the policy probably will cost you $10,000 a year. For a meaningful policy, you're looking to get maybe for every $1 you spend, you might get $3 of benefits. So that $250,000 lifetime total payment, you might get $750,000 of benefit, or $600,000, depending on the makeup, the structure, and really how much or how healthy you are, and whether or not you have a spouse, because there's spousal benefits where you can buy a smaller policy for each of you. You have a shared pool of benefits, so that if one partner does get sick earlier, you can share it. Or if you both want your own individual pools because you both feel like you both need your own individual pools, then it can be you can buy in that way, and that's all going to come into play with how much things are going to cost. So, what kinds of policies are there? Well, I would say there's really 3 types of policies. The first type of policy is one where you are paying monthly, like a regular health insurance policy. This is, we call it in the industry as traditional long-term care. Traditional long-term care is something that you sign up for and you pay monthly for the rest of your life. And these monthly payments, unfortunately, depending on the structure of the policy, can increase quite a lot every year, just like any standard medical insurance policy can. Like if you are at work and you have a medical insurance policy, the policy can increase every year it is, it's fully funded, maybe 10-pay or 5-pay or 3-pay kind of decked out modified endowment contract life insurance policy. So what that does is it pretty much, the way it's constructed is, let's say you have $250,000 and you put in $250,000 into this policy. You will probably get about $250,000 of life insurance. You probably have somewhere built in there an 80% or a 90% return of premium rider after like the first couple years. And you may have a $750,000 long-term care benefit. That's kind of what I see when I build these. It all depends again on age, state, a lot of factors on how you want the policy to pay out. But that's pretty much the second way to do it. It's like I call it a meched out life insurance policy that leverages long-term care over the life insurance. And the reason I say that is because the third type of long-term care insurance is actually a life insurance policy with a long-term care rider. And what this does is, instead of having, your death benefit be, 3 times smaller than your long-term care benefit, this one has your life insurance and your long-term care benefit almost equal. Usually it's about 80 to 90% of the life insurance face value is the amount of long-term care benefit that you can pull out of the policy. Now, with this type of policy, again, it's gonna be probably lifetime pay, or at least 10-15 pay, because you're gonna have to get the life insurance cash value. It's a permanent life insurance policy, so the cash value has to be strong enough to at least hold the policy afloat, because you have added expenses of having a long-term care rider. So with this type of policy, you're probably going to need a little bit more time to pay in, and you're probably looking at again, 1 to 3. You may be able to get away with 1 to 4 in this scenario, just because people who qualify for this type of policy are usually a little bit on the younger side, because they have more time to pay, so they're probably still working. You probably don't want to have to pay this thing into retirement, because these policies are probably going to cost you, like I said, $10,000 to $15,000 a year. So you're gonna need a lot of income to pay for that. And that's kind of the last type of long-term care insurance. I mean, there's some long-term care insurance that are attached to annuities. They call like a convalescent care rider or long-term care rider. That's not really insurance from my standpoint. You might get like, an extra 20, 50, 100% annuity payout for, a couple years if you qualify. And sometimes the qualifications are, like a year already in the nursing home before you can turn it on. So I don't consider that really protection. It's more of a fringe benefit of maybe the insurance annuity contract you have. But yeah, those are the 3 major types of long-term care policies. Now, if you wanted to get something a little bit more short-term care, a little bit more affordable, in the next video I'll talk about short-term care, which is something very new to me anyway. And what it does is it covers the shorter duration and the quicker duration for long-term care. So with that said, I'll see you in the next video.